You can be right and still lose. You're right about a particular outcome, right? You think price will move, for example, off of this support zone, maybe up here to this next resistance zone where the highs are. You might buy somewhere around this zone, right? And you have a stop loss below this zone, and you have your target, say, up here. And then what happens is after it goes into profit, you then move the stop to break even, and then price comes right here and then stops you out at break even. What's even worse is that, say you move your stop into profit, right? Say it goes into profit up here, and then you move your stop loss into profit. Now the price can come back and stop you out in profit. The fact that you can be right and still lose, what this inspires you and motivates you to do, it gives you a real incentive to start focusing on positioning yourself in such a way where you have a good risk structure, okay, at least a 1-to-1 risk reward ratio, if not 1-to-2 or 1-to-3, doing interesting stuff like moving your stop loss closer or into profit or tightening it up. All it does is it reduces the likelihood that that final outcome will be allowed to come to fruition with you still in the trade, and thus you could still be right about a particular outcome. You could still be right about price moving from one location to the other, but you can still lose. So a big portion of this is ensuring that, for one, you're positioning yourself with your entries in such a way where if price bounces or continues at that particular area, then you're able to still make a profit and capitalize on that final outcome without running the risk of the market taking you out of a trade that really you should probably still be in. Oftentimes it just comes to like increasing your stop loss distance just a little bit to allow yourself to profit from the final outcome. And you can always close early, right? You can manage dynamically. You can close early in loss, you can close at break even, you can close in profit. You can do those things dynamically, but a lot of this stuff just comes from visualizing what you think the final outcome is going to be, and then ensuring that your beliefs about the outcome reflect your actions, meaning getting into a trade, having a stop at an appropriate location and a target at an appropriate location.